Okay. And then the last arena is like broker.
Yep. So when we have scenarios that might be a little bit more outside of the box, we do work with...
And how much percentage is that nowadays, would you say?
Not a huge percentage. I would say probably less than 5% of my business that I'm doing. So when we've got something that might be a little bit more outside of the box, that your standard jumbo guidelines aren't going to fit, or your standard Fannie, Freddie, FHA, VA scenarios aren't going to fit, then we've got portfolio banks that we work with that, have more aggressive guidelines, typically come at a higher interest rate, but it's a way for a client to get their foot in the door if that's what their goal is.
All right. Fantastic. So, you mentioned your fast track approval process, which sounds really great.
Yes, yeah, love it.
And so is that rare in the industry, or is it a little more? But it's certainly not something that you're finding with the big box banks or anything like that.
Absolutely not. Right. Yeah, I would say less than 10%. I don't have the actual stat, but it's got to be less than 10% of companies do the fast track underwrite up front. And again, the reason for that is it's a lot of time and energy, not just from the loan officer standpoint, but also from the bank. They're investing time and resources with the underwriter to fully underwrite that file even before the client finds a house, so it may or may not ever turn into a real life deal.
Right.
And so a lot of times companies don't want to invest the bank operations, the underwriter's time, because they don't have the manpower to do that, and they don't want to spend the additional dollars to do that. But then it doesn't position the client in the best way possible. That's better for the bank, it's not better for the client. So we want to position our clients where they can compete in the best way possible. Also give them peace of mind too. We're super proud we've had a 0% fallout rate due to financing because we underwrite everything up front. So we don't have any of those last minute fire drills or.
Yeah, because definitely in the real estate industry, after a deal goes under contract and the financing, there can be a lot of different reasons why things get more complicated and they start to fall apart, but the whole financing arena is something that can be a problem, and so that's fantastic that this is already something that one particular stress can be taken off the table.
It's totally 100% avoidable. You don't have to have, those nightmare mortgage deals. A crazy statistic is 65% of transactions either don't close on time, or they don't close with the original rates 65%. And terms that the client was promised up front. So more often than not, something goes awry. You're closing late, you're not getting the rate you were promised up front, you were not getting the closing costs you were promised up front, or your worst case, you're not closing at all. And that to me is just a crazy stat, that it's more common than not that something like that may happen.
Right.
So for us, eliminating those issues and being able to give clients a guarantee, saying, yes, you're credit approved, we guarantee our fees up front, and it just gives clients comfort. And it does,
that predictability is so important in a transaction, because there's so many different factors that are unpredictable.
Right. Absolutely. Yeah, absolutely.
And so the pre-approval, so the loan contingency can often be eliminated.
Yes.
But there's still an appraisal contingency.
If the client chooses, yes. Yes.
Oh.
So we have to have the appraisal for the loan.
Yeah.
But the client doesn't necessarily have to have the appraisal contingency. So if they're going in, they've got a large down payment, and they've reviewed the comps with their realtor, and they feel comfortable knowing the range of what the house may appraise for, they may choose to waive their appraisal contingency.
I see.
Just again to give them a little bit more of a competitive boost. If someone has like a low down payment, we're doing the minimum down payment, and they don't have additional funds to put into the transaction
in case it doesn't appraise,
then we would definitely not advise them to waive that appraisal contingency.
I see. All right. So how often do you? I was at my Keller Williams office. We do a lot of education there, and there was one of the listing agents was talking about the post under contract things that can happen, and what he suggests is that when he gets the offers in, he actually, before he suggests it to the seller, he will call all the loan agents and see how responsive they are, because that's such a key component. Do you get many calls, or is it because you work with people so often they know that they can rely on what you're doing?
So I don't get many calls. The reason for that is I call.
Oh, okay.
I call up front.
Oh, excellent.
So when I'm issuing a loan approval letter, so if you call me and say, hey, we're going to write an offer for the Smith family.
Right.
Here's the address, here's the price. I'm giving you the loan approval letter to match specifically with your offer. And then I'm saying, hey, who's the listing agent? I'm calling them to say, just so you know, Dr. J is sending over an offer for a mutual client.
Oh,
just
excellent.
so you know, we are underwritten. Yes, we're as good as cash. We have no loan contingency. We can close in 10 days. Yes, I mean it. And I even do a $100 per diem on-time closing guarantee that I will pay to the seller if I don't fund the loan by the 10th day.
By the 10th day. Whoa.
So they know. I want to make sure, again, when the listing agent, because a lot of times if you just have a pre-approval letter, it's hard to know how much weight is really in that pre-approval letter.
Yeah, exactly.
So I want to make sure the listing agent is confident when they're presenting our client's offer to the seller to say, yes, this lender was certain, they've been fully underwritten, they're not just pre-approved, and making sure that they understand just how attractive our offer is.
Wow. Fantastic.
Yeah. Every once in a while, a listing agent will beat me to the punch, but usually I'm there first. Yeah.
That's great. And do you think other loan officers, or are you a loan officer? You aren't actually called officer? Or?
Yeah, I call myself loan advisor.
Advisor.
Yeah.
All right.
Mm-hmm.
So you think other loan advisors do that, or do you get feedback?
A lot of times listing agents are like, wow, thanks for calling. I was going to call you.
Right.
So I don't think everyone does it.
All right.
I don't think everyone does it. I know there's a few out there that do, but not everyone. Yeah.
So how long have you been in the industry?
So I got in the business in 2003. Actually started off as an assistant to my mother, who's a loan officer.
Oh, all right.
Advisor. And so I assisted her for 2 years. So from 2003 to 2005, I learned the business. 2005, got my license, and I've been originating ever since.
So that's a MLO, Mortgage Loan Originator license?
Yeah, it's an NMLS, but yeah, we call it the MLO. So many acronyms, but yes.
All right. And so you've seen a lot of different cycles happen.
Yep.
So there's still been this like upcycle since 2011 or something.
Mm-hmm.
So have you noticed the different products or the things that you can offer, like the direct lender, correspondence lender, broker? Will that stay the same no matter what the cycles?
I think so. I definitely think so. A lot of times what we've seen in past, it'll be interesting to see what happens this time around, but what we've seen in times past is that if the housing market does slow, lenders, they want to keep the momentum right there. There's investors and all of that on the back end.
Right.
So then they tend to get a little bit more creative sometimes and get a little bit more aggressive with guidelines. So we'll see what happens. I'm kind of curious to watch it myself, but when I have clients talking to me about the market right now, they notice there is a little bit of a shift happening just in terms of things are softening a little bit, but I'm super excited about that because I feel like, thank goodness, this is a healthier market than having it be so much in the favor of the seller. And so now more than ever is a great time to buy because of that, and we know rates are starting to go up. So, if you look at the numbers, no one is really debating whether or not rates are going to go up. They're going up. No one's arguing that point. We've seen it. It's happening. It's happening
and
now.
the Fed's raising its rates.
All of it. When you take into account, and that's one of the things that I love when I work with clients, is being able to show them the numbers to say, if you buy today at today's prices with today's interest rates, here's what you're looking at in terms of your payment, and here's where you'll be in 5 years. And we do forecasting for them. Or let's say you wait a year and you buy in a year. If rates go up 1%, what does that do to your payment? Assuming the house price stays the same, it doesn't go up a penny, what does that do? And then sometimes they'll say, well, what if it goes down? Okay, great, let's look at those numbers too. What if it drops $50,000? And they're always surprised to see that the interest rate has a bigger impact on what they're paying every single month than even if the price were to drop $50,000. So, there is definitely a cost to waiting, and right now rates, even though they are starting to move up, historically they're still way below average. So the average interest rate is about 8%.
Average over how many years? Is that decades? 70s.
Since the 70s, since they've been recording interest rates, the average interest rate is 8%. So we're creeping up. We're around 5%. We're getting there. So we're still, again, way below the average. So there's still a lot more room for rates to go up, and still an incredible opportunity for home buyers right now. Okay,
so once again, explain how people can get in touch with you.
I'd love you to call me. I'm at 925-339-1764.
Fantastic. Thanks so much. This has been wonderful.
Thank you.
Really educational for me too.
Okay, good.
Thanks.